Okay, great. So once again, greetings everyone. I'm glad to see you all again. And as always, this is me, Dmitry, the portfolio manager trader, and together with Bitsgap, we are working on the automated trading and how to build best solutions for you to trade like a beast to beat the market. So today we will focus on 5 topics as I always outline at the very beginning of each webcast, and that's going to be different trading styles, and basically that's the strategies that I have for you, top 3 strategies that you can follow. Risk management as always in automation in smart trading. Trend analysis, I will show you some tips and tricks when it comes to the technical analysis, and the best indicator that I use I will show you. And of course the QA session throughout the whole duration of the webcast, and at the end I will select top questions to answer. So today my primary aim is to answer on the biggest question, I think, and that is, which trading strategy suits you the most? And I outlined 3 strategies. That's the automation, that's the smart trade, and that's the HODO, and compared them in terms of risk control and complexity, as you see below. The reason why I did not outline the profit infographics like I did for the risk control and complexity is because it can be the case that with automation you can generate more returns than in smart trade mode or in simple HODL strategy. And it also can be the case that following the smart trade strategy you can outstrip the automation and HODL. So that's why I want to focus on the risk control today when it comes to the automation, smart trade and HODL, and the complexity. So as I will be answering to this question today, you will learn how to automate with Bitsgap, how to smart trade with Bitsgap, and how to combine a simple HODL strategy with automation and smart trade. So let's go straight into the action, and let's open the front page. So here I am on the trading section at Bitsgap, and we will start with the smart trade mode. And by the way, let's go back a bit. So the thing is that in automation you have the best risk control that you can achieve, and you don't have to be an experienced trader to automate in crypto. In fact, it is very easy with Bitsgap. When it comes to the smart trade, the risk control here is lower compared with automation, and the complexity is a bit higher. But the thing is that in smart trade you have more possibilities to control the profit generation. And the HODL is something that I consider as insecure, immature strategy, but still it is actual as of today, and we can still use simple HODL strategy, but I would use it with other strategies like HODL plus automation or smart trade. So that's exactly that I'm going to show you today, how to automate, how to smart trade, and how to HODL with other strategies. Okay, so we will start with the smart trade mode. And when it comes to the smart trade mode, it is basically this is the sandbox where you have different order types, like the stop limit, you have the market orders, limit orders, as well as TVAP and some other order types. So these are your orders and you can play with them. And the aim in smart trading is to find your ultimate structure. So for example, you can enter the market with a market buy or sell order, and mix this one with the stop limit order to set your take profit or the stop loss. Or you can go straight into the stop limit, and here you can play with, well, actually the limit one. Here you can, at the very start, as you initiate the trade order, this is where you can play with take profit and stop loss. So you don't have to go to the stop limit to set your stop loss and take profit. Here in the limit section, you have this option to set even multiple take profits. Okay, so it's all about finding your ultimate structure, like the best one for you to follow, and I will show you some. So the best one, in my opinion, and the easiest one, is a limit order, because at Bitsgap we have this option to set multiple take profits and the stop loss. So for example, let's open any random crypto, let's say Cardano trading to USDT. So that's, you see the chart here, you can conduct your technical analysis and all that stuff, like Fibonacci retracement. So all the tools, like the vast majority of major tools, is here at your disposal. RSI, if you are trading based on the overbought and oversold indicators, then you have it here. So you don't have to go to TradingView. You can conduct your technical analysis right here. And as you jump into the trade, here is your layout where you have, as I say, decision-making board. So let's say I want to buy Cardano. Let's set the best ask price. Let's actually put it a bit lower over here. And let's assume that I want to buy 25% out of my total available USDT balance. You see my balance, like available, is 6,000 and 25% is exactly 1,500. And here I can set multiple take profits. So let's assume that I think that it makes sense to sell, like the first sell target here, the next sell target, let's say here, and maybe the next one over here. And the cool thing about multiple take profits is that you can set them right here. So you see I have my first one at 116, the next one I have at 122, and the third one I have at 134. So here you go, you see the system automatically calculates the profit in percentage. So the first target hit is 7.41% of the growth. Then the next target is 12% of the growth, and then 24%. Okay. The next step is basically to decide how much you want to sell. And you can sell, let's say at first target 20%, the next target maybe 30%, and still you have 50% in your position. Okay. So it's clearly up to you to decide how much you want to sell at each take profit target area. And you don't actually have to have 5 out of 5. You can have, let's say, 4 out of 5. It's something clearly up to you. So you can, let's say, using this multiple take profit, you can get rid of 60% in total, and what is left is 40%, and that's something that you have to control on your own. Okay, so this is going to be your unrealized pending position in this case. So the cool thing about multiple take profits is because you secure your returns, because whenever the price hits the target, it sells. In this case, that's going to be 20%. Then the next target is hit, it's going to sell another 30%. And at the time when it sells, you can be away from the laptop. I mean, you might be sleeping or whatever. That's why when you have your take profit set, you ensure that the system will realize the return. Okay, because for example, here you see I have an open position and I have this thing known as the unrealized P&L, which is $1,146. But the difference between the unrealized and realized return is is a huge gap. The thing is that unrealized is something that you do not possess yet, whereas the realized return is something that you can have with when you have the take profit or when you manually sell your position. Only then you have this profit which goes to your balance. Right now, since it is an active order, this is something which is not yet on my balance. So it can be the case that tomorrow I open my Bitsgap page and I will see that my unrealized return is now maybe $500, whereas yesterday it was 1,100. That's why it really makes sense to have take profits set in your smart trade mode, because by doing this you secure your returns. Okay, so you can play with it as you want. You can make sure that it sells the entire position but proportionately, or as I did here, you see 20 plus 30, that's 50 and 60, so it means that 40% is left as an unrealized, which is something now under your own control. Okay, and another cool thing is that the stop loss can be trailing. So that means that, let's actually set it somewhere at 102, like this. So the thing about the stop loss is that this limits your total loss. Okay, so that's the price point below which you will not incur any losses more. So even if the price, let's make it red here, and this one is stop loss. So if the price falls to your stop loss area, this will trigger it and it will sell the entire position. So you will get rid of Bitcoins in this case. Because without the stop loss, imagine the price falls even further. So in this case, your loss would be higher. So that's why having stop loss and take profits is one of the most accurate and adequate strategies to follow, especially if you are kind of unexperienced yet and you still feel like you lack experience trading cryptocurrencies, especially taking into account that they are so volatile on the market. So yeah, the stop loss, let's actually initiate the trade, so I will show you exactly what's going to happen. So we set multiple take profits and all of that stuff. Let's stop loss set, and let's click on buy. Let's remove drawings. Okay, so I said actually buy, why not? Okay, so for some reason it's lagging a bit, I'm not sure why. It has never been the case before, and it should work properly. Let's refresh the page in this case, and let's do this once again. And yeah, and by the way, I'm trading right now in the demo mode, where I have virtual money to trade with, and the biggest advantage of having the demo mode is that you can experiment with basically risk-free money, right? So use this mode to find your ultimate smart trade combination before risking your real money. So let's set it at 10 again, let's say 25, take profit, yes, whatever, stop loss, maybe a bit lower. Yeah, so here we go. You see the smart order placed. Now I see on the chart it's been executed. So now you see its active position over here. You see all my take profits right on the chart where I set them exactly. The stop loss, and the cool thing that at Bitsgap you can move your stop loss lower right on the chart, so it really saves a lot of time. Instead of going here and then you have to change the stop loss, you have it on your chart, so you just drag the line where you want your stop loss to be. So that's the point. Or you can of course manually do this over here by clicking on the pen, and here you can adjust the settings. You can adjust the take profit, you can adjust the stop loss, and you can also enable the trading for the stop loss. So what that means, So when you have this trailing enabled for the stop loss, that means that imagine if the price goes higher, and in this case, the stop loss, it will follow the rally, okay? So it's gonna be somewhere around this area. So it always maintains the same gap as it was at the time you launched the trade. So you see right now the gap between the stop loss and the entry price. Let's actually find the approximate gap. So that's almost minus 5%. So that means that if the price goes higher, it's gonna maintain the same gap. So that means that your stop would be here. So if the price would be now trading at this area, your stop loss would be in this area, in this case. So it just follows the rally, okay? But it never follows the downfall, okay? And that's why at some point you will find that at the beginning the stop loss would limit the loss, right? But as the price goes higher, at some point this stop loss becomes your take profit, okay? Because the stop loss can be above your entry price. So right now it is below, but at some point as the price goes higher, your stop loss will be eventually higher than the entry price, and that means that now your stop loss is basically the take profit, which is cool. And that's why we have it here right in the limit box, where you can have the take profit configured multiple areas and the stop loss with the trading enabled, which fortunately, if you are right about the price direction and the price goes higher, the stop loss will become your take profit once it trades above the entry price. So this one of the strategies that you can use in smart trade mode, okay? And having multiple take profits and stop loss significantly maximizes the effectiveness of your trading strategy, because here you have one of the best risk control ever, because you have take profits for realized returns and the stop loss to secure your future returns and to minimize the loss if the price falls. So the next thing I wanted to show you is the stop limit. Let's remove all the drawings and let's switch to another crypto. Let's say, well, why not Alice trading to USDT? And here we go. So the thing about the stop limit is that you have this thing known as the stop. On other platforms, this thing also known as the trigger price or conditional price. So the stop stands for the condition that you set at some price. So for example, instead of buying right now at the current price of $11, let's assume that you want to buy Alice only if it goes higher than the previous higher high. And this is where you want to set your buy order. Because if you would set your limit at this price of 15, it would not wait for the price to reach $15. It would just buy Alice at the current price. And let me actually show you this. Let's say I want to buy 2 Alice. So you see I set the price for my limit buy at 15, which is over here. So let's see what's going to happen. Say it order placed and it eventually failed by the market buy. So that's the thing. But in order to buy at the higher price, having your limit order, use the stop limit. Because here you have this stop and you set it at 15. That means that once the price hits 15, it will place a limit buy order. It can place it at 15 as well, or you can place it at 14. So let's say once it goes and triggers the 15, it will initiate limit buy at 14. So it's going to place the limit buy at this point over here. And once the price falls a bit so that it triggers this limit buy, you are in the market in this case. All right. So this is how you can use the stop limit when you have some certain conditions to be met. And this was one of the possible examples where you want to see the price trading above this previous higher high. Okay, so use the stop limit in this case to ensure that you enter the market at the right time. So now you understand the concept of smart trading, where you have different order types and you can play with them to come up with your ultimate strategy to maximize your returns and to minimize the loss. But this really requires a certain experience and intuition, because here you must be very good at the fundamental and the technical analysis, and you must be really good at recognizing patterns on the market, because trading patterns and using some other indicators can provide you with the best sell and buy opportunities on the market. Because the thing is, the technical analysis is not just about the statistical representation of the market activity. Technical analysis can really tell us what the market sentiment is on the market right now, and what is the how to say, well, basically it tells you what is the behavior right now on the market. So you can identify whether the bulls outstrip the buyer, the sellers, or the opposite. Okay, and when you are able to recognize like patterns like ascending triangle top or descending triangle, so there are many different types of patterns that you can recognize based on the price formations. And these patterns, they are formed because of the trader's psychology on the market. And as in other things in our life, you can spot a tremendous amount of patterns that can repeat in the future. And that's why using technical analysis, where you just need to have enough experience to be quick enough to spot best buy and sell opportunities, and use all available smart trade tools to seize the market at the right moment, to maximize the returns and to minimize the loss in case you were wrong. So that's the thing when it comes to the smart trade, where you really need to have some experience in order to take the best out of this strategy type. So let's see what questions you have. Yeah, the one I was just using, that's the trading view, because in trading view, even though you have it here at Bitsgap as well, it's just that on the trading view you have a bit of more instruments, and I just got used to having my technical analysis on the trading view, and some other tools here are available, which is not the case when you have your trading view on Bitsgap. It's a bit limited, but still you have all major tools you need, and it really makes sense to use them right on the Bitsgap platform, because here you can trade and analyze simultaneously, which saves a lot of time. But if you want to play with charts, then trading view is something for you to consider. You can quickly switch to other cryptos. You can have multiple chart layouts, so it's up to you how you conduct the technical and fundamental analysis. So yeah, anyway, let's go back. And the next basically strategy is the automation, where we have the best risk control, and that's, in my opinion, the simplest strategy that you can have on the cryptocurrency market so far, thanks to Bitsgap, because the way we made it here at Bitsgap, it is really simple. So we go to the bots section over here, and you also have the chart here where you can conduct the technical analysis at your convenience. And you see I have some active trades already, some investment change so far, the return generated by the bot. So the aim of automation is to generate returns in the quote currency. So for example, you see I have UFI trading to BTC. In this case, the bot will generate returns in Bitcoins. I can switch to Aave trading to BNB. In this case, it's gonna generate returns in the BNB. So the aim that our bots follow is to buy low and sell high, okay? And that's why you have this grid layout, and green lines, they represent limit buy orders, and red lines, they represent limit sell orders. So basically, in automation, you tell the bot, you set certain rules, and you tell it, buy low, sell high, follow, trade only within the trading range that I set, and you can define it by your upper price and lower price. And you see I just drag the line, and this is the trading range where the bot is going to trade for me. And you also set other rules for the bot, like the stop loss and take profit. But let's follow this step by step. Let me just show you that here it literally takes you 3 simple steps to configure the bot. So at Bitsgap we have 2 strategies, that's the SBot and the classic bot. And since we have only one other on this webinar, I will not explain in details what makes SBot different from the classic bot, because that's something that you can read here on the knowledge base at Bitsgap, like what's the difference between the SBot and the classic bot, and what is the ultimate strategy, as well as we have the YouTube video where I explain in details how to set the auto-bot. So that's something that you can just spend some time by reading, and here everything is outlined, and you can find what makes SBot different from the classic bot. But in brief, like the SBot is for the sideways market because it generates the highest return on the sideways market compared with the classic bot. So the sideways market is when the price moves like this in the horizontal trading range. That's what the sideways market is. That's basically the period of accumulation or the distribution. You see, the accumulation phase is something that you can spot before the big rally, and the distribution phase is something that you can spot right after the big rally, because here basically traders are now fixing their returns. You will see short sellers entering the market because they think that the price now is too high and most likely the price should fall, and that's why they open short positions, which eventually downs the market. So you see it eventually goes down. So the aim here is to identify which market phase you have right now. So for the accumulation phase and for the distribution phase, the best strategy is the SBot. It trades the best, and it generates biggest returns on the sideways market. Whereas the classic bot is optimal when you expect the market to rally. So the trading range can look like this. So this is when you expect the market to move like this. You should stick with the classic bot strategy, because this is this perfect scenario on which the classic bot generates the highest return compared with the SBot. So on this rally, the SBot would generate less than the classic bot, as a rule of thumb. And we made many experiments, and I made some experiments and found out that the SBot is optimal for the sideways, and it really outstrips the classic bot on the sideways, whereas the classic bot is best for the rising market. So once you identify the market phase and you can identify it using some technical analysis tools like the moving average that I have here. You can also use the volume profile, and which is something that I think we will discuss a bit today as a bonus, but that's not the primary agenda for today. So once you identify the market phase, it's time to set the bot. So let's say we expect the market to move sideways over here. So that's why you stick with the SBot. That's the first step for you to do. The next step is to figure out what is the investment that you want to allocate to this bot. And since this is Aave trading to BNB, the allocation is in BNBs in this case. So you see that for 126 grid levels, that's basically the sum of all limit buy and sell orders, it is enough to allocate 16 BNBs. But what if I want to reduce? Let's say I want to set only 3 BNBs. So the system will tell you that that's actually not enough to have 126 orders in total. So you need to increase it up to 13 BNBs. But what if I don't have 13 BNBs and I still want to stick with this trading configuration? Then click on adjust grid levels. So now, having only 3 BNBs, you can launch the bot, but instead of 120 grid levels, it is now 27. So that's the maximum for your 3 BNBs. Okay. The reason for that is that there are minimum trade requirements for each limit sell and limit buy order on the Binance. On other exchanges, they have their own rules. It can be that on Binance, it's like, I think it's 10 USDT per one order. That's the minimum for the vast majority of cryptocurrencies that it has. And on OKX, and KuCoin and other cryptocurrencies, the minimum trade size can be lower or higher. So that's why we have all options here. You can trade Aave to, well, it's basically BNB, and that's why it's only on Binance. But if you, let's say, trade Aave to Bitcoin, that you can find that you can launch this bot with a fewer investment on OKX compared with Binance, for example. So find the ultimate exchange for you to trade this cryptocurrency. So you will find that on some cryptocurrency exchanges the requirements are lower, and on some they are higher. So that's the tip for today. The next thing for you to do, and let's go back to our BNB, and we had like 3. Yeah. So the third step for you to do is basically to make sure that you have the take profit enabled if you need it. The stop loss, well, I strongly recommend to have the stop loss because that's something that limits the loss in case if the price falls instead of going higher. And I mean, being wrong is always painful, right? But at least make sure that you have a limited pain, and this limited pain is estimated in the dollars that you lose, and that's why having stop loss is a must, because this really limits the pain, because it can go even further down. Okay, so I actually have the example on this account. I think I have one trade right now. Yeah, here it is. You see, I have 1 inch trading to USDT, and my trading range was set in this area, and I did not have my stop loss below this area, and that's why I incur the loss of minus 22% right now. And that's just because I did not have my stop loss at the right point. Okay, so since this was just a sample trade, in real trading I do not forget about the stop loss, and that's why this is something I always recommend. Make sure that you have the stop loss both in the smart trade mode, which is this one, and in automation stop loss is a must. You see, you have this option to set the stop loss, the take profit, and the trading up. So there are actually more tools, and due to the nature of automation, it really minimizes the loss on the downfall. So that's why in automation the risk control is higher than in the smart trade. So let's go back and let's see. Let's go to our BNB. 3 BNBs. Yeah, so you set the stop loss below the area, and yeah, we can try this one. If you don't have Aave on your balance, it will just buy it with a market buy order, so that you don't spend, I mean, so that you don't waste time. Okay, so here we go. We have our bot active here. You see all the grid sells and grid buys, they are perfectly visible on the chart. The stop loss is over here, so everything is perfect. But if you forgot to set the stop loss, the trading up, and the take profit, then you can go here and you can always modify the trade. You can set the trading up, you can set the take profit, and you can always adjust the stop loss. Okay, just click on modify. So that's basically it when it comes to automation. You define the strategy. I mean, you set the best strategy based on the market phase, and you remember that the SBot is for the distribution and accumulation, and for the advancing, the best one is the classic bot. The next step is to define the allocation, and the third step is to make sure that you have all instruments to maximize the return and to minimize the loss, and that's the stop loss, take profit, and trading up in this case. Okay, the take profit here works pretty much the same as in the smart trade mode, except the fact that the take profit is defined by the investment change, but not by the price. So whenever you see the change approaching your take profit, so let's say I have 15 for my UFI trading to Bitcoin. So right now it's 11%. As soon as it reaches 15%, the bot will automatically close the strategy. It will just sell all of the base currency, which is here in the active bot. And you can always see the amount of base currency by just clicking on the information. And here you see the base in open order. So that's my current amount of base currency in this trade. So that shows me to how many UFIs I am affected right now. So as the price fluctuates, that means that the value of my UFIs, it falls or it rises. So that's why my investment change is always different compared with the bot profit. So the bot profit is always positive because that's something that the bot accumulates regardless of the trend. It can buy low and sell high on any trend formation. So you say it can buy and sell on the sideways, it can buy and sell on the downfall, and it can buy and sell on the upside momentum as well. So that's why it is completely indifferent towards the trend direction. And that's why it is always positive. So this column is always green. The biggest question here is why you see your change lower or higher than the bot profit. And the reason for that is because you have UFIs to which your investment change is really affected. Because you see, even though my bot made 40% on this cryptocurrency, as you look at the chart, you see that UFI was falling, like in a long-term perspective relative to Bitcoin, the price of UFI was in the downfall, and that's why the value of UFI depreciated, and that's why my investment change is only 11%, because this 40% basically offsets the negative value change of my UFIs, you see. And let me actually show you the perfect example of how automation works on the downfall. So here you say, let's assume that you decided to buy Quantum, where I have my HODO pointing at. So this is the point of time and price where you purchased Quantum. Imagine that the price then falls, and now you bear a loss of minus 6.88%. So this what would a simple HODO strategy bring you? minus almost 7%. Whereas if you would launch the bot on Quantum to USDT, then in this case you would only have minus 3%. And that's thanks to the bot that was trading on this downfall, and it accumulated 23 USDT to offset this negative value change of the Quantum, and that's why the total investment change is only minus 3% instead of minus 7%. Okay, and this is an extra point to automation, which explains why automation in terms of risk control is the best solution. If you want to have the least risk exposure on the market, then stick with the automation. And starting with automation, I would say that's one of the best decisions that you would ever make when you decided to trade cryptos. So if you are the newcomer and you've never traded Forex market or whatsoever, you are new to crypto, then starting with automation, with Bitsgap automation, you can really figure out the sentiment of this market so that you develop your skills towards the smart trade mode. Okay, so that's what makes automation different from the smart trade and the HODO. In automation, once again, you have the best risk control, and since at Bitsgap we have the ultimate configuration, that's why it also turns out that automation at Bitsgap is the easiest one to start with. Okay, so you can still generate returns on the rising market, but it's just that the bot makes all the trades on your behalf, and you just need to monitor its activity from time to time, because sometimes it can be the case that you need to close the bot to open the new one with better settings based on current conditions on the market. Because it can be the case that, let's say you launch the SBot here and now you see the price going higher and you expect the market to continue the rally, then it makes no longer sense to stick with the SBot. You'd rather switch to the classic bot with new settings. So this is basically one of the cases when you should step in. In other cases, the bot just buys and sells regardless of the market direction. It just does the job. Okay, it buys low, sells high, and sticks with the plan that you set it. So what else should we discuss? The third one, yeah, that's the HODL strategy, and honestly, that's the most insecure and, in my opinion, immature strategy that you can implement on crypto. Okay, some would argue that HODL is the best one in terms of return generated because they look at the chart and they tell you. So let's remove all the indicators. So some people tell you that, okay, you buy here, let's use the horizontal line, at the price of 38, that's BNB, and you HODL it. So up to current price, you would be up by, what is that? You would be up by 500%. So that's what they tell you when it comes to HODL. Just buy it and wait for the price to appreciate. But the biggest the biggest side effect, like the drawback of the HODL strategy, is that it implies that you must be 100% sure of what the price is gonna be of Bitcoin tomorrow. Okay, because the thing is, you never know what the price of your selected crypto is gonna be tomorrow, the day after tomorrow, and in order to take the best out of HODL strategy, this is the only thing that you need. You need to know the exact price that it's gonna trade tomorrow, but it's really like impossible, to be honest, and it's the pure luck to be right about the price. I mean it's something that you cannot predict really, and that's why it makes more sense to follow smart trade and automation, because in automation the bot realizes returns whenever the price swings higher or lower, and it always finds these opportunities to take the profit out of the market. Yeah, I mean, of course, if you compare the return generated by the bot that let's say you launched at the price of 38 and you would hodl up to the current price, of course automation would bring you less returns. But the thing that you have to understand here is that this return is realized, whereas in HODO the return is unrealized. Okay, and in most cases, like those who made fortunes on this market, they were just lucky enough not to be greedy and to sell the crypto. I mean, those who made fortunes, they forgot about the price chart for like 7 months or sometimes years. So they remember they purchased it, let's say at $500, and 2 years passed. They even forgot what was the allocation they made 2 years ago, and now they see the CNBC news about Bitcoin that the price now is 20,000, and they're like, whoa, man, I purchased Bitcoins back then it was 500. So these people are those who made fortunes on HODO. But the mature strategy would be to follow the smart trade and automation, because here you have the risk control and you have this secure profit generation, because bots, they buy and sell on your behalf, so you don't have to manually trade the market. And in smart trade you can set these multiple orders, like the multiple take profit and other instruments like the stop limit, market stop, to secure your returns and to minimize the loss. Because imagine if instead of going higher the price would fall, so your HODL strategy could bring you like minus 200%. I mean, of course it would not go below the zero, but let's assume, okay? So I mean, you could lose everything. So that's why it really makes no sense to follow a HODL strategy with regards to the risk management, okay? Because the aim on the market is to accumulate and to set trades that have the best ratio between the return and the risk management. So in Bitsgap, that's why we have this thing as projected loss and return. The aim is to set targets higher than the projected loss. So for example, let me show you, let's illustrate to you 25. So you see here I have my stop loss where at the price of 13. Why is that? Okay, let's use the current price and stop loss at, let's say, 9. Yeah. So the thing is that your projected loss should not be higher than the projected profit, because it really makes no sense to risk that much to earn only that much. So risking 160 makes no sense to make 18%. And that's actually what you do in the simple HODL strategy. You risk everything to earn a certain sum that you don't really know what it's gonna be tomorrow or the day after tomorrow. So that's why when you enter the cryptocurrency market, here you want to generate steady returns. You want to be consistent, and this consistency is only achieved through the smart trade and the automation, where you can generate returns on a daily basis. Okay, so automated bots, they actually bring you daily returns, and you can see this here. You see average daily. For some of my bots I have 0.65%, 0.13%. You see, they bring returns daily. You see all the metrics provided, like every day you see how much it earned, and this is something that goes directly to your pocket, and that's the only thing that matters for you, the profit which goes to your pocket. That's the only thing that matters. I mean, yes, HODL strategy can be profitable if you were right and if you HODL it for a long time and if you are not greedy and if you are, how to say, you are psychologically stable. Like, you don't have this temptation to sell whenever the price falls a bit. You just HODL it, and that's why you really need to have balls to HODL crypto for a long period, because it is so volatile that it can drive you crazy. It can fall like 80% intraday sometimes, and yeah, this can drive you crazy. And that's why HODL can be rewarding, and at the same time that's the most immature and insecure strategy. And that's why the ultimate solution would be to mix with these strategies. So you can mix with HODL and automation and smart trade. So the thing is, you can, let's say you have $1,000. So you decided that you want to allocate 20% of this $1,000, and that's going to be 200 in this case, to Bitcoin. So you go to trading, and you just, let's say you go to market and you buy Bitcoins worth $200. So this is going to be your HODL allocation. That's 20% of your balance. The rest, 50%, let's say, goes to automation. So you allocate $500. Let's say you want to split $200 to AvaTrading to Bitcoin. You want to allocate another $100 to another bot. So in total, you have like 5 strategies active, which on a daily basis, they generate consistent returns. This is something that goes directly to your pocket. This is what I call diversification on the cryptocurrency market. Diversification with different strategies. That's the ultimate diversification that you can achieve so far in the crypto. Of course, you also have some passive income strategies like liquidity swaps and all these things like liquidity pools on Binance, but still mixing with strategies is the ultimate diversification that you can achieve on crypto. So that's why in this example we have 20% allocated to Bitcoin. That's going to be HODL. Another 50% you split it in automation because you want consistency, you want to have your risk control, and the rest you can spend on the smart trade. So that's what, that's exactly 30%. So 20 goes to Bitcoin HODL, 50% goes to automation, and the rest 30% is something that you can use in this sandbox as known as the smart trade mode. So use this 30% to find best entry and exit prices for various cryptocurrencies, play with take profit, play with the stop loss, so that you can create ultimate strategies to beat the market, okay? Because in automation, bots are limited to the margin that they can take out of the market. So you see this grid step, this is something known as the marginal profit. That's basically is the gap between your buy price and sell price. And that's why each trade brings you 0.66%. And that's limited to this number. When it comes to the smart trade mode, here you can have your margin whenever you want. Like you can have it at 20%, 30%, but just be realistic. Set your goals, like realistic goals, okay? Don't risk too much and don't be greedy, okay? Set multiple take profits, okay? I remember the times then I purchased Bitcoin when it was at 10k and Ethereum when it was at 700, right? And as of today, you see the Bitcoin is around what, 51,000, and Ethereum is around 1,700, and I mean like tripled the balance in this case. But I found myself a bit greedy when I saw the price of Bitcoin falling from 60,000 to 50,000. But then I just start to think, where was my point A? My point A was then I purchased Bitcoin at 10,000 and Ethereum at 700. So what I see now is that I made decent returns. And even though the price right now falls, in a long-term perspective, I made decent returns. I still in the profit area. So I don't have to be greedy and to worry about these short-term falls, okay? Just be consistent and be honest to yourself and set realistic goals. And most importantly, don't be greedy. Set multiple take profits so that you consistently generate returns that go directly to your balance. What really matters is the realized return, but not the unrealized return, because unrealized is something which is you do not possess yet. Okay. So yeah, the key takeaway of today's webcast is mix with different strategies. By trading automation, you can learn some skills. You can learn how the market behaves and what is your ultimate strategy to enter and exit this market. In the smart trade, you can learn your best. You can create your ultimate combination of using different orders that there are, like the stop limit, stop market, multiple take profits, so that you can generate bigger returns for a minimized risk. And using HODO, you can play with the luck, because that's the most insecure and an immature strategy, but that's the pure luck in this case. It determines how lucky you are, that you were at the right time, at the right moment to buy or sell a certain crypto, okay? That's why I would allocate 20% to HODL, because it really can bring you the fortune. Smart trade is for those who have experience, and this experience you can make on automation. So automation is the ultimate strategy for those who are just beginners, and for those who want to achieve the ultimate diversification on the market. So if you are an experienced trader, consider using automation for your diversification. And HODL is I would say the one that only suits those who have the ultimate experience on this market. So they are aware of the volatility. You are aware of the ultimate risk management tools that we have here at Crypto. So this one is the option for those who have experience. Okay. For newcomers, HODL strategy can be really painful. You can lose really everything. So do not stick with the HODL strategy. Do not allocate 100% to HODL. That's my top recommendation. Mix with these strategies, and this will bring you consistency and stability on the market. So yeah, I hope I answered to today's biggest question, which was, what is the best strategy for me? Like, which strategy suits you the most? So automation is, well, actually I already covered this. You see this risk profile and complexity profile. Just define which one suits you the most based on the objectives that we discussed today on the webcast. So for the automation, we have two strategies: SBot for accumulation and distribution, and the classic is the best one for the advancing market. Okay. For the smart trade, we have the ultimate limit configuration, where you have multiple take profits, stop loss, which can be with the trading enabled. Okay. And other instruments like the TVAP and shadow order. This is something that I explain on other webcasts, but you can read about it here as well. And thanks to the demo mode, where you have virtual money, you can use this virtual money to experiment in order to figure out whether the TVAP order is something for you or the shadow order is something for you. So use this mode to experiment and to discover your ultimate strategy. So let's see top questions as of today. Okay. Yeah, and by the way, regarding the automation, that's something that I usually cover on other webcasts which are dedicated just to automation. Automation can be the best strategy for those who want to accumulate the code currency. So for example, let's go to automation here. So let's say your aim is to you expect the price of Ethereum to trade at $10,000 in 3 years from today, for example. Okay, let's assume. And you are now pondering, what is the ultimate strategy for you to accumulate Ethereum? And you figure out that you have some cryptocurrencies that are trading to Ethereum, like Aave to Ethereum. So that means that launching bot on Aave on trading to Ethereum, it generates returns in Ethereum in this case. So you accumulate Ethereum here. Let's actually go to TradingView and I will show you something here. Let's open easy trading to Ethereum, and I hope it appreciates right now. Yeah, actually I used this one on previous webcast. So you see, that's easy to Ethereum, and if you launch the bot on this crypto, that will generate returns in Ethereum. And imagine that at the same time, the price of Ethereum relative to USD, where is that? USD. Okay, let's use Kraken. So the ultimate, like the high yield strategy on automation, is to find those cryptocurrency pairs on which you can accumulate the crypto that appreciates relative to USDT at the same time. So you see, I have the price of Ethereum relative to USD appreciates, and at the same time I have where I have my bot active, easy to Ethereum, it also appreciates. So that's the ultimate high yield strategy to literally make from $2,000, you can really make $50,000 in just a matter of few months. And that was actually the case for one of our users, and you can actually find this article at Bitsgap, where I explain how did he manage to make this, just following this high yield strategy. So yeah, 50k journey from 1k in 4 months. You see, here's the video, and here's the explanation of what was this strategy that this dude stuck with to make this fortune. Okay, and that's something that you can make with automation. The only thing is you have to find this right crypto which grows relative to the quote currency you want to accumulate. So the aim here, we want to accumulate Ethereum because we anticipate the price of Ethereum to grow relative to USD, and that's why. So this overview that you see is the ultimate configuration, I mean the cryptocurrency pair that you are looking for. And launching automated bots on the cryptocurrency pairs like this one is the, once again, ultimate high yield strategy. But at the same time, this is the one, I mean, it brings the most risk because that's the price you pay. For the high yield, the risk is always higher, because what you can see is that both the price of Ethereum relative to, where is my brush, relative to USDT falls, and you can also see the price of Easy relative to Ethereum also falls. So this would bring you minus 2x. So this is the biggest risk that you can take in automation when you are exposed to both Ethereum and Easy in this case. So the price of Ethereum to USDT falls and the price of Easy falls as well. The conservative strategy on automation would be trading to USDT, because here you are exposed to the volatility of only of the base currency. So for example, BNB trading to to USD. Here you accumulate returns once again in the quote currency, that's the USD, and you know that the price of USD is $1, sorry, USDT, and that you know that tomorrow it's going to be $1 as well, and the day after tomorrow most likely it's going to be $1. So that means that the returns that you accumulate on this cryptocurrency pair is something that is no longer affected in the future, whereas you are only affected to the price of BNB. But when trading cryptocurrency pairs like ETH to Ethereum, then here you are exposed to the double pressure. You are exposed to the downfall of Ethereum relative to USDT, because you generate here returns in Ethereum. That's your return. So this is something that goes to your balance. And it can be the case that you open to see the current value of your balance tomorrow, and it turns out that due to the volatility of Ethereum, it is now like the value of your balance is now lower or higher if the price of Ethereum relative to USDT is now trading higher. So that's the thing you have to take into account. For the highest return, you take the highest risk as well. That's been always the case in trading cryptocurrencies, in trading stocks, in trading forex, whatever. It's always been the case like that, that for the best return, for the highest return, you take the biggest risk. But in order to minimize the risk, you have all the tools like the stop loss, the take profit to ensure that the profit is realized, and having multiple take profits that you can have here in the smart trade also ensures stability and that your profit is not lost. So let's see other questions that we might have. Yeah, unfortunately my phone is down, and on my phone I have the chat box open, so in order to see your questions I actually have to open the YouTube. So yeah, thanks to Paul, thanks to Paul's answers. He supports me throughout the whole webcast. So yeah, big shout out to Paul. Thanks a lot. Otherwise it would be impossible for me to answer on all of your questions. So we do everything we can to make sure that everyone can ask the question and that everyone receives the answer. Is it yeah, by the way, the bonus that I wanted to show you is the futures trading, and that's something that I have here. No, it's actually not here. So let's go and I will show you. That's something which is not yet on the main Bitsgap domain. It's something that we are still fixing and making sure that everything is all right. That's the futures trading, and that's the product that is just about to be released. And it's just that it takes a bit longer for us because we need some things, like minor things, to be fixed so that everyone gets the best out of this product and everyone is satisfied. So let's switch to futures. So that's something that soon you will see is the combo bot for futures trading, where you have the long strategy to generate returns on the rising market, and the short strategy, which will short sell the market using the grid and the DCA technology to take the most out of the downfall. So literally you can, with this combo bot, you can generate returns not only on the long market, which was the case for the spot bots, but on the futures you can now generate returns on the downfall thanks to the short selling that is the primary feature of futures trading. So here you can set the leverage, the cross, and all this stuff. Same applies like to take profit, stop loss, which has originated from the spot bot trading. So nothing new, stop loss, take profit. So everything is taken into account, and with this combo bot you can now generate even more returns for the minimized risk if you follow strict risk management, like the stop loss and take profit is the options for, like, these are the options for you to maximize and to minimize the risk. So that's something to be released very soon. I mean, that's the primary focus of Bitsgap, like one of, as of today, to make sure that you no longer see the beta, so that the combo bot is available for everyone. Right now it's not yet available for everyone, but I just wanted to show you that just we are really about to release this one. So stay tuned, be patient. We are doing everything we can to make this product the best one on the market, so that you would enjoy it and generate even bigger returns. You can actually mix futures bots with the spot bots. That's the ultimate strategy. But that's actually something that we will discuss on future webcasts. So right now I just show you that, yeah, this something is about to be released, and that's something that only you guys who made it till the end of the webcast who sees this, yeah, the rest won't see this one. I will not show this one next time, because I think next time we will have this product released. So yeah, you are special. Those who see this one right now, you are special. So yeah, anyway, I hope I answered to the primary question of today, and that is, what is the ultimate strategy for me? So based on my explanations and the learning curve that I provided you with, you have automation, smart trade, and HODO strategy to mix with. You can diversify with these strategies to achieve, to have the best experience on the cryptocurrency market. And from each of this strategy, you can learn something new about the market. That's why it really makes sense to try all of them to find which one is the best for you, and then to find what is the allocation that you can use to mix with these strategies. So as the example I made, HODL 20%, automation 50%, and the rest goes to the smart trade. So this is one of the possible diversifications that you can have on crypto using ultimate Bitsgap products. So yeah, thanks a lot for your attention. I really appreciate your time, and I really hope you enjoyed this webcast. Next time I hope that I will have more time to answer on more of your questions, and that next time I will prepare something new for you. Like maybe we will discuss some trade configurations that you can use on automation and on the smart trade. So we will focus maybe on automation next time, so that you will get the ultimate experience to trade with Autobots at Bitsgap. So I will show you exactly what is the configuration you can use for the sideways, for the rising markets, what is the grid step you should set, and other tools to use to maximize the return, like the trading up and all these tools that we have, which is something we did not cover today, but we will cover next time. So really stay tuned. And by the way, don't forget to join the futures tournament. It is still active, and it's 6 days left until the end of the competition. Right now it's about 584 traders in Bitsgap team. So yeah, join the Bitsgap, and we have still 6 days to beat the rest to take this huge prize. And we have here team prizes, we have here individual prizes. So yeah, just you can go on Binance here on tournament and just type in the Bitsgap, and you can join the Bitsgap, or you can go here, block, and here we have all information about the tournament, and here you can just join the Bitsgap team, or I can also send you the link, guys. That's the easiest thing to do, just to send you the link. So yeah, let's do this all together. Once again, I really hope you enjoyed today's webinar, and see you next time. I really wish you to have profitable trading. Stay safe. Cheers.